The market is panicking, and retail investors are doing exactly what they always do, bleeding out at the bottom. Right now, screens are flashing red as the VIX violently spikes past 40. The catalyst? A rapidly closing nuclear deadline with Iran, and the very real threat of an escalating Middle Eastern conflict. We are seeing a massive, indiscriminate flight to safety. Algorithms are dumping equities, and amateur traders are paralyzed by the headlines. But here is the ruthless reality of Wall Street. While the crowd is paralyzed by fear, institutional money is actively weaponizing it. Today we are dissecting the ultimate fear premium trade, and why Chevron is about to liquidate the bears. Before we even look at the geopolitical catalyst, we have to look at the institutional anchor. While the world spent the last few years completely obsessed with wildly overvalued, unprofitable tech stocks, Warren Buffett was executing a totally different playbook. He quietly and aggressively accumulated Chevron, locking it in as a massive top 5 holding in the Berkshire Hathaway portfolio. And he is holding it perpetually. Why? Because the Oracle of Omaha does not buy hope. He does not buy speculative AI promises. He buys fortresses. And right now, Chevron is the ultimate financial fortress. Buffett fundamentally understands that the global energy transition is decades away from reality. He bought Chevron for its cash flow moat. In an environment where inflation threatens to reignite and supply chains are fracturing, Chevron is an activated inflation shield. Think about it. Energy is the base layer of the entire global economy. If the cost of living spikes, crude oil spikes right along with it. And Chevron's revenues absolutely explode. This isn't just a legacy oil stock sitting in a retirement account. It is a mathematical certainty designed to protect capital when the broader market collapses. Now let's zoom out and look at the macro trigger that Wall Street is actively pricing in. Look at this map. Roughly 20% of the world's daily oil supply transits through a single, highly vulnerable bottleneck, the Strait of Hormuz in the Middle East. It borders Iran, the UAE, and Oman. If geopolitical tensions continue to escalate, and this maritime choke point faces any sort of naval blockade or military disruption, the global energy supply chain doesn't just slow down, it faces critical failure overnight. You are looking at millions of barrels of oil suddenly erased from the global market. This geographical bottleneck creates what institutional traders call the fear premium. Listen to me carefully. Missiles do not even have to fly to make this trade work. The mere threat of a disruption, the sheer panic of a blockade, is enough to violently push Brent crude prices soaring. We are talking about an immediate snap towards $100, $120, or even $140 a barrel as nations scramble to secure strategic reserves. And this exact scenario is where Chevron's asymmetric advantage kicks into high gear. While the market endlessly debates the macro politics, Chevron just confirmed its Q4 earnings, and the numbers are an absolute flex of financial dominance. Do not look at the mainstream headline numbers. Look under the hood at the engine. In a single quarter, Chevron printed a staggering $10.8 billion in operating cash flow. Let me repeat that. Nearly $11 billion in cash generated in just 90 days. On top of that, they posted $4.2 billion in pure free cash flow. They are quite literally drowning in liquidity while the rest of the market struggles with rising debt. But here's the plot twist that retail investors and mainstream analysts are completely mispricing. If the Middle East burns, Chevron is completely insulated. Why? Because management has spent the last year heavily pivoting to domestic assets. They just increased their U.S. domestic oil production, specifically in the Permian Basin, by a massive 16%, hitting an all-time record high. They are less dependent on overseas chaos than ever before. Their core asset base is sitting safely on American soil. This dynamic creates the holy grail of investing, pure margin expansion. Chevron is pumping massive, record-breaking amounts of oil, safely in Texas and New Mexico. Their fixed extraction costs are locked in. But if the global realized price of crude spikes by $40 or $50 due to a war in the Middle East, their costs stay exactly the same. That entire $50 price jump drops straight to the bottom line as pure, unadulterated profit. That widening gap between fixed cost and exploding revenue is pure alpha. And for the ESG critics or anyone claiming that legacy oil is a melting ice cube running out of reserves, the hard data completely destroys that myth. Chevron just reported a massive 158% reserve replacement ratio for the year. That means for every single barrel of oil they pump out of the ground and sell, they are actively finding and securing 1.58 new barrels to replace it. They are growing their underground wealth faster than they are selling it. The runway here is essentially infinite. To top it all off, management is executing a flawless paid-to-wait strategy for their shareholders. They just announced a 4% hike to their quarterly dividend, raising the payout to $1.78 per share. Think about the psychology of this trade. You are literally being paid ascending cash payouts every single quarter, just to sit patiently and wait for the geopolitical catalyst to trigger. While other traders are paying premium prices for options that decay, Chevron is paying you to hold the position. This brings us to the ultimate valuation disconnect. You are looking at a cash-printing fortress, sitting on record US production, with massive geopolitical upside, and yet it is being priced by the market like a boring, legacy utility stock. The immense weight of their $10.8 billion cash flow completely anchors the downside risk. But the geopolitical tension acts as a coiled spring for the upside. Right now, this isn't just a deep value stock anymore. The technical momentum is beginning to take over. The system analysis is complete. Geopolitical panic is nothing but noise for the unprepared, but it is the ultimate catalyst for the informed. While our terminal signals green, we never blindly tell you to strong buy any equity. Instead, we view Chevron as the ultimate asymmetric strategic hedge against global chaos. If the market bleeds, Chevron acts as your armor. The market is panicking. We are profiting. Subscribe to StockScope, hit the bell, and stay on the right side of the tape.